In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Luke Falasca giving us a broker update. We also have the DHL Supply Chain Pricing Power Index coming up with Kevin Hill and special guest Kyle Lintner. But first, a word from the Sultan himself, Zach Strickland, with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to the Carrier Update presented by PowerFleet. So we have made it through the third week of January, which is traditionally one of the softest, slowest weeks of the year. Congratulations, you made it to Friday. Let's check out what we're seeing. So tender rejection index over here, a little bit flat throughout the week, and then all of a sudden we had one of the biggest single day over day declines in the index since early January, when we were coming out of this big holiday period where we're coming out of Christmas, capacity was returning online rapidly, et cetera. So 7.12% tender rejection rate nationally. So what that means is we think that that's going to continue throughout the week. Next week, we should get a little bit softer going into the end of the month, but then we may see a little intermittent disruption from that. You see a little bit of an increase towards the end of the week as we close out the month. Isolated spots across the country tend to get a few little disruptions here and there as the capacity starts to be disrupted by surging volumes in isolated markets. So looking at the weighted rejection index across the country, a lot of red here. Iowa, of course, is having some trouble covering stuff. We've had a lot of weather here in Iowa, continuous flow of Midwestern storms, a lot of snow, a lot of ice around the Kansas City, St. Louis area this week. So it has created a little bit of disruption there. The northern tier of the United States actually coming back down. We're seeing rejections come back down to earth, not as unstable as we've seen over the past few weeks. Some of the larger markets, however, in the country, these tend to be where carriers go this time of year to find freight because volumes are a lot higher here. They're safe, they're good, lots of traffic, lots of activity there, so you're going to be able to pick up freight. But we're seeing, numerous spots of decline. Harrisburg, Pennsylvania, out here in the northern part of California, the Pacific Northwest finally calming down. But Los Angeles over here, over the last few days, has actually started to pick back up a little bit, coming back to life a little bit. So let's dive into that a little bit. So right here I've got the Van Outbound Tender Rejection Index for Ontario, California. You see that it was calming down quite a bit. Reefer rejections as well, going down to the floor. But then here in the last day or so, 6.37%, a big jump up from 5% yesterday on the Outbound Tender Rejection Index out of Ontario, California, which is the second biggest freight market in the United States. What we're seeing here is an increase in rejection rates across the board outside of the tweener rejection, which only had a marginal decrease here over the last day, down 0.02%. But everything else, capacity seems to have been tightening a little bit more on the West Coast here in the last day or so. So let's check out a few of these other big markets. Atlanta, Georgia was experiencing a moderate level of tightness here over the last few days. That seems to have ceased a little bit here. If you're looking at the reefer outbound tender rejection index, however, for the market, a little bit more reefer activity coming out of Atlanta as that rate jumps up. But the van, which is the majority of the freight coming out of the Atlanta market, van rejections are a little bit smoother here over the last day or so at 4.71% versus about a 4.8%. So the difference here is that the trend has changed. So if you're expecting to get more freight out of Atlanta, not so much here over the next day or so. So let's pick on one of the other bigger markets in the United States, the Joliet market, which is up around Chicago. Nothing to see here. Volumes are declining, rejection rates are falling off. Chicago market, tends to be a little bit more disrupted by weather. We're just not seeing that right now. You did have some snow this week, but it didn't really cause any significant impact to your traffic pattern. Volumes are falling down as well. Again, like the rest of the country in any of these markets, Don't expect a lot of activity here over the next week or so, but by the end of the month, things may pick up a little bit, but we're in that doldrum period of the year, so just be ready for that. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke and I'm bringing you another broker update for today, and happy Friday. All right folks, so we've got a couple of things going on here at this chart. So over here in blue, we've got the dry van tender rejections here in the United States over the last year. All right, so you notice we're gonna look at this a little bit different. Now the green line is the reefer tender rejections over the last year. So what you'll notice is we had the holiday spike here, but we're actually down about 17% for dry van rejections from where they were this time last year. So that's how you look at this chart, is how do we compare to this time last year? Down about 17%. Reefer rejections are down about 31%. So while we had a really good holiday season right around Christmas time and just after, it really did cool off quite quickly, and it's actually continuing to drop. We found our floor there for a little bit, but then it started to drop again, and we saw that happen today. Both are falling down. We'll see if that continues to happen, but you might be able to continue to push carrier rates down a little bit in order to create margins. And shippers will expect you to do that. So we're gonna look at a couple of areas of opportunity here for today. So let's go to our call map. Today we're looking at the weighted rejection index. All right, so the way you read this map, this looks at how rejections move in certain markets relative to the volume and market share that they have. So markets that you would wanna focus on where shippers are experiencing a little tightness today would be markets that are in blue. So the darker the blue means the bigger areas of opportunity. Shippers are having a little bit more difficulty getting their freight covered. The red markets are contracting markets. There's a lot of softness. Shippers are not having the difficulty that they typically have, so it's getting easier for them, so maybe not quite as areas of opportunity comparatively. So you might see down here in Southern Cal, that's great. We're seeing some areas of growth. We'll take a look at there later. A little bit here on the West Coast in Oregon, in the middle of the country, down here in southern Texas around Laredo and Dallas, Fort Worth area. Florida looks like a great opportunity, as well as a little bit there in the Northeast. So keep an eye on those areas today for when you're making your calls, and as you're calling shippers, just be mindful of what is going on. So next we're going to go ahead and look at the Ontario, California market. So we saw tender rejections hit about 7.25%. That's the high so far this month. We fell all the way off a cliff. So hopefully you were pushing your carrier rates down all the way until the 22nd when we hit that low point, right just under 5%. But we saw a massive spike today. Or since yesterday, we hit almost 6.5%. So that's a really, really good push, especially in a market like the size of Ontario. When you see rejections go up that heavy, that quickly, that's a really good sign that there's probably some shippers having some difficulty covering freight. Carriers are declining their contracted freight, looking for spot market freight. So if you're moving spot market freight out of Ontario, push your spot bids up. You should be able to charge a little more to shippers today from where you were charging yesterday. Looking at some of the lanes, the highest lane, or the lane with the highest tender rejections, is Ontario to Seattle. So if you're moving any freight on Ontario to Seattle, tender rejections are at just over 10%. That's a 17% increase day over day. So if you're moving freight on that lane, be sure to push your bids up. You're going to be paying a little bit of a premium to carriers because they don't want to go to Seattle right now. Looking at our predictive rate feature here, we'll be looking at the median price point. So today, bids are sitting at about $1.98 a mile. That is line haul for dry van. So add your fuel surcharge. We'll be using 34 cents here is our fuel surcharge per mile. That's your all-in rate. So you're looking just above $2,700 to move all in Ontario to Seattle today. And there's probably going to be some upward pressure on pricing as we go out a week and a month. So be mindful. This is kind of where this might be the low point. There will be upward pressure. So be mindful. Get your loads covered today. And I'm Luke. That'll do it for your broker update for today, and have a fantastic weekend.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hi, and welcome to this week's DHL Supply Chain Pricing Power Index. I'm Kevin Hill, here with our special guest, Kyle Lintner from K-Ratio, which is a risk management firm out of Chicago.
Right.
And what we have this week, we have 35. We did have 40 last week. We had to bump it down 5 this week. And for a quick reminder, as it goes to 0, the shippers have the pricing power, and as we go to 100, the carriers have the pricing power. So start off with freight type of metrics. Volumes very flat. Tender rejections are coming down, meaning that there's a loosening of capacity. It's still better than it was in January of 2019 and most of 2019 in general. But it is still falling. January is a soft month anyway.
To be expected.
To be expected. And then we have really good economic news.
Right. We've seen positive retail sales, positive housing starts, classic American retail / house buying consumer. What that means for us is more goods and supplies flowing through the economy, which obviously is going to be positive for freight. Relatively flat, like you mentioned, volumes year over year.
Construction's really good. 99.1%, or was it 99.3% on the University of Michigan Consumer Sentiment Index? It came in just a fraction below expectations, but 99 is still more than it's been in 20 years since Bill Clinton was in office. So
I know we're down
really
5 points here, but all things considered, I think it would relatively healthy freight market.
Very healthy. 35 comes down. It's a little bit seasonality in play, and then last Friday, J.B. Hunt was the first brokerage to really, and transportation company, to really report earnings. And
little small blip in there. They mentioned they saw tightness in capacity, which is positive momentum for the industry. And I think that's kind of why we're in this area instead of closer towards 0.
It is,
Yeah, exactly. We're seeing some movement of freight as it relates to volume, and we see this capacity begin to tighten. The next step then obviously is possibly rates moving higher.
Rates moving higher, right? That's what we're all kind of waiting for on the carrier and broker side. Of course, on the shipper side, you kind of like the like the environment right now of strong macro data coming out and low rates. But I think the tightening of capacity is coming. J.B. Hunt really highlighted that coming in, not only in peak season Q4, but coming in mid-January up until...
And we saw some of that in the rates, right? December was a positive movement in rates. We see some of it coming down now, but that's to be expected. But we look at the year-over-year comps, you're seeing flat volumes, and what are we, down about 1% as far as tender rejections are? And that's what we see manifest itself in the somewhat lower rates.
Somewhat lower rates, and to be expected January and February, but it's kind of laying a really good foundation as we come into March, April, construction, produce season, construction season, really heavy industry manufacturing season coming in. So it's setting up to maybe climbing back up.
The conditions are there.
The conditions are there.
We'll need a catalyst, but the things you would want to see to get that above 50 are present.
They are present. It's a real possibility now for the summer months.
Right.
It really is. Well, thank you, everybody, for joining us for this DHL Supply Chain Pricing Power Index, and have a great day.
And that's going to do for this Friday edition of FreightWaves Now. The content doesn't stop here. We're always posting around the clock, so check us out on all your favorite social media platforms. And check out FreightWaves TV on all your favorite streaming platforms as well, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.